Hold on. Let's see. Open door technologies. All right, there we go. So let me get this thing pulled up. I don't know if like the way the screen share is showing, I'm not the other screen is not in the way of what you guys see on like what I'm sharing, is it? Let me make sure you guys have access to the on the chat. Okay, so I was trying to make sure it wasn't like covering it like this here, but probably with that part. Let me see. I may just do content only. So that way, let me come up here. That way, well, let me see if I can make this bigger. Hold on. Let's see. And make this smaller. Okay. Probably put it over here till we go to the charts. Okay. So I want to go ahead and get started. And of course, the recap will be posted in the Skool community. So the first thing that I want to look at, I mentioned this earlier in the Skool community where what is it? Open Door is looking to allow, they registered to have their current investors to be able to sell their shares publicly. And so because we talked about Open Door in the Skool community before, I wanted to kind of bring this one up so that if any of you were either still holding your trade or if you did, leaps on it, January, February, possibly, just something to kind of keep keep on your radar to know how this thing is kind of going to go, or just simply what it means for the most part. And so they registered a sale of 180 million shares at $6.56. And what this does is that when it allows, I guess, when you look at it, it wouldn't exactly mean that the shares will just like automatically jump to whatever that price was, which you see is 656. But we have noticed that Open Door has come down from what it was when we were looking at that trade. And so with Open Door selling off a number of shares, they're either likely raising money because they're needing capital. They have been registering quarter on quarter losses. So they possibly raising money because they need it or because some of their pre-investors in Open Door is looking to sell off their shares. So they're those investors from them before them hitting the stock market. So it's like either they're wanting to get out or Open Door is simply raising money. And this is one of their ways of doing it. And so we're going to look at the charts for Open Door tonight. Because I wanted to kind of look at the charts a little bit to kind of go over. So I just kind of wanted to mention that we've seen this thing come down massively. We've seen the corrections and the pullbacks and all of that happening with the sell-off in tech happen big time Friday, but it's been happening all week really. So we're going to look at all of that. Let me see what else that I wanted to look at over here before we got into the charts. Um, Oh, so well, this right here was kind of part of the sell-off, but I want to say this because a lot of people we were expecting a massive rally behind Tesla recently because they approved Elon's $1 trillion pay package. And with that, a lot of us were expecting a massive, massive run. Even I was, but I had to make a decision because initially I was like, I'm going to either do a straddle or a strangle and not just get into a call. But initially, I was like, okay, well, I'm going to just do a call. But if you've ever done a straddle or a strangle where you're buying two legs, a call and a put in one trade, you're just basically playing both sides of the fence. And I was just like, it's expensive because you're paying for the call and the put at the same time. And so I was like, well, okay, I'll just go ahead and do it that way. Let me copy in $1 trillion pay package. We can kind of look at that really quickly. And it actually came down. Still a part of that massive, sell-off that we saw happening in tech. And a lot of people probably lost out on that trade heavily. And I decided, okay, you know what? I already know how these things go because you remember when we had earnings on Tesla, we thought Tesla was going to skyrocket. They did beat their earnings, but they still came down big time. Okay. So sometimes with even this type of news, kind of got to be willing to play both sides of the fence or just wait it out. And then next day come, we just react to what the market is giving us. And to be 1,000% honest with you guys, we definitely could have waited that out to where we didn't need to jump into any trade because this thing actually opened lower than even I was expecting. I wasn't expecting a massive run up. But I will say, if it was the other way around and they decided we're not going to approve this pay package, Tesla would have definitely came down and we would have saw probably a major short opportunity. Now, I was kind of 50-50 on this thing, but at the same time, I'm like, I don't think they're not going to approve it because they already knew what it would mean for Tesla stock and all of that. Okay. But my biggest thing with this too, we have to look at we have to look at, even though he was approved for this $1 trillion pay package, the only thing with it is that he is going to have to hit certain milestones to even get it. This pay packages look to be paid out over the course of a decade. So it wasn't like, they just dished out 1 trillion to him off the bat. Okay. And so I was trying to go back and find that article that I was reading. It had a lot more details and a lot of the milestones that Elon is going to have to hit before he is, officially paid this thing out. And it's a massive pay package. And it's going to be a lot that we are going to see with Tesla because their whole thing is kind of riding on the future of AI with Tesla. But we also got to look at Elon also has another company that mainly facilitates AI. And we just gotta kind of have to see how this thing plays out. I know a lot of people aren't like heavily in trading Tesla because of how expensive it can be. But that's why I also bring up TSLL. So you're gonna see me posting a lot of levels and things to watch with this as this thing progresses, as we get more information, as well as going into, looking at TSLL because you can trade them both. They move similar, but of course, you'll see more on Tesla because of, the type of stock that it is. But don't try to jump on Tesla just because, but it's definitely going to be something that we are going to be watching heavily with this thing. Okay. So wanted to bring that up. We are going to look at Tesla charts tonight as well. So we'll get to that. Kind of do a rundown really quickly. Oh, that was what else? Apple's partnership with Google. Um, One of the things that I want to say this was unexpected, an unexpected partnership, but we initially seen that Apple has their partnership with OpenAI. So a lot of people probably weren't exactly expecting a partnership to take place between Google and Apple to bring AI to the next iPhones. Okay, so Apple's $1 billion Google AI deal will be great for iPhone users until it's not. So this was one of the ones that I was reading. Let me go back. So the news of Apple's pending deal with Google says a lot. While neither Google nor Apple will likely ever publicly acknowledge it outside of necessary financial disclosure, Apple fans should take note. I'm gonna be honest, this was some of the same things we were kind of reading when they partnered with OpenAI. And I think it had a lot to do with mostly Elon sparking this whole security issue with OpenAI and Apple, but I really believe that it has more to do with Elon's and Sam Altman's the whole OpenAI beef that they have between each other. So it was a lot that he was sparking, and we were seeing some of these same little necessary risks between these AI partnerships happening. So we just kind of have to see how this thing goes. Okay. So the deal, as it has been reported, Apple has not officially acknowledged it. We will see acknowledge will see Apple paying Google $1 billion a year to use a customized version of Gemini AI model for the new Siri, which should be released to users in the spring. And at first, I was looking at this as $1 billion, like over a multi-year, but this is $1 billion a year deal. And with this thing potentially progressing, we definitely need to keep our eyes on Apple and Google as this thing kind of goes. Okay, so let me see. Go back to the this may not be the same article that I was looking at, kind of detailing the differences with, Apple's and Google AI deal, and then Apple and OpenAI's deal. Okay, so we'll get more into it. And then this is something else I wanted to kind of go over, and this is one of those reasons why I have been saying a lot about investing in Amazon, not just trading it, but investing in it. So if many of you guys were in the Skool community, you were mentioning about how Robinhood was down recently. And a lot of people for the first time found out just how much some of the biggest companies in the world rely on Amazon, and that is through their AWS whole infrastructure. Okay. Their AWS data center went down. One of them went down. Robinhood was down. Roblox was down. Fortnite was down. Even some banking mobile apps were down. A lot of companies, more than you guys know, rely on AWS. And a lot of people was trying to figure out, what did all of these outages have to do with Amazon? Why did Amazon keep coming up? Simply from a lot of these apps are built on top of AWS, okay? Amazon's Web Services. And so let me go down and see if I can find that full list. Like a lot of apps, let me go back up, were down bad. And people for the first time found out what that was all about, what AWS is all about. If you ever looked at some of their like their terms, or just kind of looked at it, you may see that AWS somewhere, powered by AWS. It all comes from that outage, that all of them were down. So this is why I say to keep Amazon in your investment portfolio. I started with this one a little bit early, and the more that some of the biggest companies rely on it, the more that we will see Amazon become even more valuable. Not just Amazon on, we shopping on Amazon. You can get anything off Amazon.com, but they are far more than a marketplace. Okay. There are companies that literally rely on this thing to stay afloat. Okay. Demo, Snapchat, Fortnite, Facebook. And then, of course, you have all of Amazon's services, and their products are also built on top of AWS. So if you were seeing these massive, massive outages and you're just seeing them across the board, it's simply because AWS. If this thing decided to just go out worldwide, we're going to see a massive outage happen worldwide. So it's a lot more to Amazon than just their marketplace. And so it should definitely be one of those key players in your portfolio. And it's why I too have been really prioritizing my investments into Amazon. Because being in tech myself, I learned early on about AWS and just how plenty of that we use and just to run our everyday lives, our phones, apps, and all of that stuff was on AWS. And when I learned that, it led me down a bigger rabbit hole trying to figure out what else Amazon has going, and some of the biggest companies in the world rely on them. Okay, so make sure you are keeping Amazon on your radar. We're going to also look at their chart. NVIDIA. Many of you had a massive loss on NVIDIA this week, and it's understandable. We saw those sell-offs happening. We saw those sell-offs taking place, and it wasn't looking too good. And let me say this, I've been seeing a lot of stock market crashes, or the market crash Friday. This is not a crash. It's simply what you call a correction. And when you hear correction, it's just basically saying a stock has ran up so much that the current price that it is, it's just like we're trying to get it back to a corrected value, a more fair value for this company. Okay, so a correction happens. It happens all the time. And it's something that I had to learn early on, was that I could be trading one day or just looking at the stock. I'm like, so did we just experience a stock market crash? Because Friday, a lot was red, pretty much everything, really. But we were not in any type of crashes. We were just in a massive correction across the board, whether it was Nvidia, AMD, Tesla. And this is one of those reasons I tell everybody, when you see massive run-ups happen, AMD was the most recent one. Don't get scared, or not say don't get scared. Don't get FOMO and try to jump in, and then you see this thing starts to come back down. Stuff will always come back down to either fill a gap or it will always pull back, especially when we see a massive run up happen like that. And that is one of those reasons I said all the time, don't jump in yet, because AMD ran up like crazy when they announced that OpenAI partnership, and everyone was trying to figure out if it was too late to get in. Corrections will happen. They may happen one at a time. They may happen in a day across the board, across different companies, but they happen. And AMD did come back down. It has not came all the way back from when that run up happened, but it can get there. So just keep that one on your radar. And I'm going to look at the charts too tonight so that it can be something that we can take, that you guys can take with you going into next week. Okay. So I was kind of trying to look at some different things that I wanted to kind of bring you kind of the reason why I wanted to look at them on the chart. We're going to look at MicroStrategy tonight, SoFi, Intel, kind of give you guys a mix, because I know with MicroStrategy, a lot of you may not be interested there because of the premium cost. And then we kind of look at some of the others, okay? But if you're ever looking for a stock that moves like Tesla, MicroStrategy will be one of those things, all right? And they also have really like Bitcoin movement, crypto movement really plays a part in MicroStrategy movement as well, or it can have some impact there. So it's just something that I want you guys to be able to watch. Just a reminder, Netflix has a stock split coming up. I talked about that in the last live. This is going to be a 10-for-1 split. So for every one share, for every one share that you have in Netflix, it'll become 10 shares. And just something to keep in mind when this split happens, premiums may be a little bit lower, but because of the demand that could potentially be coming in from this split, we may still see some expensive premiums there. But this would definitely be a great opportunity for those of you who may not have ever traded Netflix, or to invest in Netflix where you are getting your shares much cheaper. And so depending on, I guess I would say, depending on like where, like, I'm gonna see what is Netflix sitting at right now. You may be looking at 110 to where that stock split will be. So let me open up Trading View on my phone really quickly. Let's see, Netflix. So right now, Netflix closed out Friday at $1,103. So let's just say we're still in that 1,100 range. Comes the stock split, we might be looking at $110. Okay, and so now that this thing is so much more accessible to retail investors, we will see a major demand for it, and we will see a lot of momentum going into Netflix. But if you miss any major run-ups on it, because now that it's 110 or 100, it may be up $10, maybe up 15. This is just that stock split momentum kicking in, and it will likely come back down a little bit, but this will definitely be an opportunity to get back into Netflix at a lower price and to kind of grow with it. So it's going to be the opportunity to add this to your portfolio, and I'll definitely be adding some more shares. I have one share of Netflix. I got it back when it was $700. So I've been holding it for a while. I didn't get it as low as I would have wanted to, but hey, once this thing splits, I'll definitely be looking to add to it. So just something for you guys to consider as well. Okay, because we already know Netflix is one of the big players in the streaming area, or sector rather. It has the potential to grow again. It will not exactly move the way that it moves now, but it's definitely going to have a lot of momentum going into December and the remainder of this month when that split happens. So there'll be opportunity to ride this thing to the upside and the downside. Just don't get, scared. Don't get FOMO. Try to jump in at the top, and then you getting caught in this thing coming back down. Remember, with this new level that we're working with, they got to start testing new levels to the upside, to the downside, kind of seeing where things are working now. So it's going to probably be some volatility there, but you just got to kind of react to what you see and not just prematurely jumping into any trades. Okay, so We'll talk more about it as that stock split happens and do a little bit more following on it, kind of watching those premiums to see if we can kind of add Netflix to that. I wouldn't say low risk, but I do expect those premiums to still be 150, 200, $300, especially in the early days from the split, because that demand is going to be crazy. Okay, so we'll cover more of that. Let's see what else I wanted to look at. So like SoFi, Intel, are two stocks that I kind of wanted to look at again tonight because they're getting to a nice little level from this whole thing that went down on Friday with stocks starting to come back down. We're getting back to some nice levels on that. So wanted to watch that to put on you guys' radar for next week for those of you who need like a lower risk play. Okay, so we'll look at all of that. But tonight, I wanted to do a lesson for those of you who are interested in day trading, because initially the whole Skool community was supposed to be surrounded around swing trading. But the more people that came into the community, a lot of you are actually day trading. Some of you are even scalping. And so I want to be sure that I am pretty much giving you guys something to work with on both sides, with the scalping, with day trading, as well as swing trading, so that you can kind of have some strategies and some things to look for on the charts when you are when you're day trading. Okay, so we are going to look at two things that I'm asked about consistently, and I've also been kind of teaching these and showing these to some of my students as well, which is the orb strategy and the concept behind marking the pre-market high and pre-market low. You hear these things as different things, but both of these concepts pretty much have both of these strategies have the same concept. Okay. And so what I'm going to do is I'm going to go to Tesla. We're going to come back to TSM, okay? Because I definitely want you guys to keep this one on your radar. I've been trading this one for so long, and you may have heard of it, you may not. But the ties that TSM have to the biggest companies in the world, especially Mag 7, explain exactly why this one should also be one of your stocks that you want to focus on to add in your portfolio as possibly trading it. But for me, I am looking at this one as a longer term investment because they are tied in heavily with the AI space, simply because they are a semiconductor, which is a chip manufacturer. The biggest companies, Nvidia, Apple, not Apple, but mostly Nvidia, Amazon, Google, all of them heavily rely on TSM for their chip manufacturing. So without them, these chips that NVIDIA designs them and TSM manufactures them. And that's the same thing with a lot of the other companies. But all of the other companies are really relying on NVIDIA. NVIDIA is relying on TSM to manufacture these chips to meet the demand of the companies that we use every single day and that we are seeing heavily in the space of AI. So we're going to talk a lot about that the remainder of this year, really, in the Skool community, and when I'm just trying to put some things on your radar. Okay, so we're going to come back to that one. So let's get into the lesson for the most part, which is the first. Let me make sure I'm clicking the right one. There we go. So I'm going to take all this off, and we're going to go to the 15-minute time frame. Now, the first thing that we are going to look at is marking your pre-market high and marking your pre-market low. And the entire concept behind this strategy is looking for a breakout. It may be similar to those of you who may have heard of the orb strategy, which is an open range breakout. It's the same concept, but you just make the decision on, okay, how long are you looking to be into this trade? And you know what? Let me put that out there, because I used to make this same mistake. When you're looking at these type of strategies, whether you're doing the open range breakout, the orb strategy, or whether you're marking a pre-market high, marking a pre-market low, waiting for a breakout, is knowing when to get out of your trade. That is the biggest reason why this strategy doesn't work. A lot of times we get into it and we sometimes go into it with unrealistic expectation. And what happens is when we do that, we overstay our welcome in these trades. And when we do overstay, this strategy that you're trying to use, you may deem it as this thing doesn't work. Maybe you're just not working it correctly. That was the talk I had to have with myself. What was I doing wrong? Likely I was overstaying. Okay. So let me mark this up. So on Tesla, currently I am on the 15-minute time frame. Let me move this out of the way. Okay, so right now we are on the regular trading hours. I am going to go to the extended trading hours because it makes it much easier to instantly mark up my pre-market high and my pre-market low. Okay, so that's the first one that we are going to look at. The pre-market high / low markup. Let's sweat it. All right, so and if you're using TradingView, if you want to set up your background like this, so this blue part here is the post market. This is after the market is closed, and this is going from 4 p.m. to 8 p.m. Eastern Standard Time. This is all the action we see happening once the market closed. And this yellow part here is the pre-market. Okay, this is from 4 in the morning to 9:30 when the market opens. Okay, and if you are using TradingView, if you want to add colors to this here, or you want that to show, you'll just right click, you'll go to your setting, and you're going to see pre/post market hours background. And you'll go here, and you can make it whatever color you want. You can, I keep mine, as low as possible, but you can make it as dark as you want, and you just do what you need to do so that you're able to do it. Okay, so you're able to make that adjustment. And if you don't see it, it's because you need to change the session and change it to extended trading hours. Okay, so that way you can easily go and find your pre-market activity here. All right, so first thing is marking up the pre-market high. Okay, and if you are able, or I don't know if you guys are writing it down, or if you're able and you're using TradingView, just simply kind of go along with it if you're able to do it. So that way you can kind of be doing it as I go and kind of getting yourself familiar with it a little bit. You probably already heard of the strategy, but I watched a 30-minute video on YouTube and that was explaining this. This could be done, you guys, in like 15, probably less than 5 minutes, to be honest with you. Okay. So it's not a complicated strategy. All right. So we got that pre-market high. This right here is the pre-market high, which is the highest point that the stock has been before the market opens, from 4 in the morning to, let's just say, 9:25. In this case, it'll show here at 9:15, because this next candle, we get into the market open at 9:30. Okay, so this right here is the high, and then this is the lowest point in this little box here. All right, so we got 437 and we got 456. That was the high and lowest point that Tesla was in the pre-market. Now, what is the entire concept behind this? It is just basically saying whichever way that the movement or the price breaks out first is the way that it will either go for the day or it can go for a period of time. Now, you can mark it up on your 15 and then you can mark it up on your 5 as well. All right. It just kind of all depends on you, but you're able to kind of come to either one of these. I like to go to the higher time frames because lesser candles, quick markup, and call it a day. All right. Once I mark this thing up, I go back to my regular trading hours. Sometimes I'll keep it up and then sometimes I won't, but you'll see the markup is still there. Okay. Now go back to the 15-minute time frame. And there we go. So this right here, considering the way everything went with Tesla on Friday, we stayed below for the most, pretty much we came down, but we pushed back up and it was kind of acting as a resistance. So I'm gonna go back to the extended. I'm gonna keep it here. Let me also note this, something that I told a student as well. When you kind of have this pre-market high and this pre-market low, it'll do one or two things. It'll range in between that pre-market high and that pre-market low price, where it could have been going from here, it could have just been going, in between the entire day. It could have just been going up and down, up and down, up and down, or it will break out. Now, my main thing with this is wanting to actually see a breakout. Even though it may range here, it's telling us, all right, this thing has been ranging in between this pre-market high and pre-market low. It kind of gives us a sense of where we can make our move. Like if it gets back here, we get into a put, we ride it down. If it gets back here, we ride it up. And you just kind of look for rinse and repeat opportunities there if it's like ranging in between it. But the entire concept behind this is looking for a breakout. And that breakout is below the pre-market, that pre-market low here. We got a breakout to the downside. It came back up. It tried to break back above it, but it didn't. And for me, closing back above that after pushing that back up here would have given me the confidence to make a move on a quick trade to ride it down some more and come out of it. All right. And so we can do, you can kind of play the inside of that, but I like to do the breakout because it gives me more confidence in the direction that this thing could be going. And this is what I mean by knowing when to get out of the trade. Sometimes you can see here, well, I'll say this first though. Tesla moves in massive increments. So it's like catching this thing from here and riding it down still would have been a good play. If you can catch a $2.50, possibly a $4 or $5 move, you have just had a good trade. So it's the overstand that makes this little simple setup very, very hard for some people because they're looking for massive moves, especially when the market opens, but that's not always a good idea. Okay. When you get in, either you set a target or be okay with the profits you've been giving so that you can literally just get back in on a rinse and repeat if you have the opportunity and not overstaying too long. Okay. So let me mark this up because I'm going to add this in with the replay. So pre-market high and then we got the pre-market low. And anytime that I day trade, this is the same thing that I do. Either pre-market high, pre-market low, or I just simply do the orb strategy to do my day trades. Okay. Unless there's opportunity where I can get in, where maybe support and resistance is being hit. I think I shared that once in the Skool community where I did 3 trades on SPY. It hit support, I got in. It hit resistance, I got in. And I got in one last trade before the market closed, simply playing in between the little range that was happening. And it was some quick in and out trades. Okay. So I do that as well if it's presenting itself. But something like Tesla, I want to see a breakout happening, kind of see where level we are before making the move. Okay. So let me take that off. And so we got that breakout. It came down. It came back up. It kind of treated this as a resistance and it pushed back down. That's another thing. The pre-market high and pre-market low can act as short-term resistance in the same concept. To where if it's ranging from here to here to here, what is that telling you? We got support at whatever this level is here, and we got resistance at whatever that level is there. So you got opportunity to rinse and repeat if it's ranging. Okay. Now, pre-market high, pre-market low. That's all you're marking up. And I'm not sure what platforms everyone's using to, I guess, do that charting. But if you're using TradingView, you can easily find that by simply coming down to your extended trading hours, looking for whatever this little block color is for you for pre-market, and you mark it up. And once you get that breakout, that's when you make your move. Some people are not patient enough to wait for a breakout. That's another thing. Like it can open up and it could just be playing in between here. And then finally, 2 hours in, it decides to break to the downside, or it may break above. And some people just don't want to wait it out. And they may jump in and it goes against them. Okay. So patience is also a thing when it comes to doing this. Now, with that, it's the exact same concept with the orb strategy. Most people use a 30-minute. Some will use a 15-minute to mark up the first 15 minutes or the first 30 minutes of the market open. Okay. Now, what I'm going to do is I'm going to take all this back off. And we are on the 30. So basically, the concept behind this particular strategy is to look for a breakout from whichever direction from the first 30 minutes of the market opening, or it may even be the first 15 minutes of the market opening. It just all depends. Now, this is another thing with this one. You'll see it's just pretty much the same thing. You can either get some ranging in between that, or you can look for a breakout. So in this case, you will look for a breakout above this to see if we will keep pushing up, or a breakout below it and see if we will keep pushing down. Same concept. But in this case, we ranged in between this here, back to back. Well, I'm gonna say back to back, but if you go to that 15, you'll just kind of see it was just kind of here and came down, here and came down. Again, using it as a support and resistance kind of thing. But you just simply marking where this thing was the first 30 minutes, maybe the first 15 minutes of the market, and you want to see where a breakout will happen. Opportunity will be on the breakout, or opportunity could be inside of the range. Okay. This is called an open range breakout. And the concept between on this one is to wait for a breakout. The question is, do you have the patience to wait? In Tesla's case, it was ranging. And there still could have been some opportunity there. And by opportunity, we have a little tweezer here, right up in there. And the tweezer is when the open and close of a candle is at the exact same level. And the tweezer top, rather, and we will come down. And because of how Tesla moves, there would have been some opportunity here to make a move, even inside of the range. Okay. And it's just getting out when you know you need to. Okay, so we kind of had that there. I wouldn't have jumped in on here. I would have given it about a candle or two, just kind of see how that thing went. And we could have caught a nice little move to the downside. This thing here is what, about 437. Even with just catching this little ride down here, like kind of before the market closed, that's a $7 move right there. Catch 250 and $4, maybe $5 of that, a great trade. But just don't jump in prematurely and act on the way that their entire strategy is explained. Open range, breakout, wait for a breakout. Sometimes Tesla, you just got to kind of know how to maneuver with this one, because we see how big it moves up or down. You can still catch a great move, even inside the range. Just react to what you're seeing on that chart. Okay. So let me go to SPY, and we're going to mark up that exact same thing really quickly. And so we're going to look at that pre-market high. Let me come over here, take some of these candles off. I'm going to go to the 15, zoom that out. And this is all from Friday right here. So we got that pre-market high, let's see, sitting right here at about, what is that high up here? Hold on, let me go back. And then we got right here, right up in there. Okay. And what we have, we got a breakout below that, and we rolled it down. This thing pushed back up, it broke back up here, and we retested the pre-market high up here, and it kind of stayed below that. Even in the post-market, it still kind of stayed below this little level. But because the sell-off that was taking place on Friday, it was inevitable that this thing was coming down. Okay. Tesla's down, Nvidia, all of them were down. So of course, SPY was down as well. And you may notice something I mentioned in the Skool community, that Tesla and SPY somewhat has a similar movement if you look at their charts side by side. Okay. So that's just the simple pre-market high, pre-market low, wait for the breakout, and you make your move there. And another thing, this is a concept for day trading, even if you're scalping as well. This is not a concept for swing trading, because you're looking for quick movement here. We're looking at the 15, the 30, maybe even the 5 minute. So we're making our moves according to the time frame. Okay. And that was going to be another lesson I was going to talk about tonight, where what time frame to use for your trading style. Right. So that's the concept behind that. You pick the one you want to do. You want to look for pre-market highs, pre-market lows, or do you want to look for the first 15, 30 minutes of the market, which you will mark right up in here? Okay, so we got that pre-market low and high. Then we got that little open range part, which will be here. The first 15 minutes of the market, which way is the stock going? Okay, simple as that. That is all it is. And all the things for you is to be patient and let a breakout take place, or allow the stock to show you what it's going to do before you hop in. Okay. That was a big issue for me. I mean, a big issue. I'm just like, all right, I know they said to do the 15-minute or what to use a 30, but it's taking far too long to break out. I get impatient, I jump in, and I might get lucky, or it goes against me completely. So be patient and allow this thing to come to you before you make your move. So you will see this as a simple and good trade. You get in, you get out, set a target, and you rinse and repeat throughout the day or however you're planning on doing it. Okay, so just something to add to your arsenal if you are day trading. All right, treat this as a support and resistance. But also keep in mind that it can break at any moment. Okay, so 15-minute, 30-minute for your order, or you're doing your pre-market highs, pre-market lows. Set that up every morning to where you mark it up and you just wait for your moves based on which way it breaks out. That's that. All right, so feel free if you have any questions about that, you can just put it in the chat and then we'll kind of revisit that. Okay, so any stock that you're trading, it doesn't matter if it's SPY, it doesn't, I was going to go to QQQ, but they move similar as well. You know what, let me go to something else. What was I looking at? Was that Berkshire? No, it was MRK that I was looking at with someone else. Because I was trying to, kind of help them with this strategy. But here's another thing. This is why I wanted to come to MRK, because this is the stock that they brought up when they were asking about day trading. When I put the trade for this, and I hope any of you guys who saw that, you were able to catch this one. This MRK trade was an amazing, amazing trade that I had put into Skool community, uploaded the video on this one. And so that was the second one, by the way. You guys see these here? This is why I told them, let's kind of focus on something else or allow MRK to make some movement before you decide, or use the orb strategy. Okay, this is the pre-market. Look at the pre-market. You see these little straight lines here? These are what you call four price doji, or you may see something like this here where you have like a dragonfly doji. You have what you call gravestone doji. These are just, I wouldn't say volatility. If you see like a bunch of that, that's one thing. But these four price dojis mean that the price did not move for that entire session. So for 15 minutes, the price stays the same on these little flat dojis here. Okay, not a lot of activity going on in the pre-market. So you also have to know when to and to not use a particular strategy for of any particular company. In this case, I wouldn't have done the pre-market high and pre-market low. I would have probably come and done the orb strategy. Okay, marked up that first 15 or that first 30. Let me take that back off. Right up in here. I would have marked up the first 15, the first 30 minutes, and kind of seen what we were working with there. MRK is not one of those ones that I like to day trade. This is mostly one of those ones that I like to swing trade, simply because of the type of company that it is, dealing with pharma and stuff like that. Anything can happen. Any type of news can come out that could have some impact on our trade. And I want to be able to catch that long term versus quick day movement. Okay, so know when to use particular strategies on certain things. This here, yeah, you can still come and mark up your pre-market high and pre-market low, but look at these swings here, that the market opening. We got some downside here, but for the most part, it was choppy. This is not what I like to see when I'm day trading. Okay, so if I were to see something like this or that pre-market look like this, I'm going to the orb strategy. That 15-minute high, 15-minute low, and see what happens from there. But you can see it kind of rained. In a stock like MRK, you want to focus on getting a great entry to hold for a good period of time. Okay, and you guys can kind of see, I still have that little line down there where when I say a good entry, I want to see us get back to some heavy levels to make a move, get in on a call and ride it up and hold it a week, 2 weeks, or whenever I'm pretty much ready to sell off. But I know that I have time in my trade. Okay, so some strategies will not work with some stocks because of the way that they move. So that right there, that pre-market high and low would have been out of the question, and I would have possibly given it a chance on here. But with this right here, got some nice upside, a little downside here, but it's just still a little too choppy for me to even want to focus on a day trade for something like this. Okay, so know when to use a strategy, know when to switch it up a little bit, or just leave that particular stock alone and find something that would be more fitting for what you're trying to do. Okay, so that's why I want to take you guys to MRK, because just to show you how that chart was looking in their pre-market. And then, it's not a whole lot of action there to really give me confidence to use that strategy. All right. So the next thing, I wanted to take you guys to look at SoFi and Intel. And these are something that I want you guys to kind of keep on your radar for next week to get into some trades. And we're also going to go and look at MicroStrategy, and we're going to look at NVIDIA. Okay. So I'm going to go to the 4-hour on this one. And I'm going to bring this down, and I'm going to take all of this off. I uploaded a video on this one. So some of those markups are still there. Actually, I'm going to go to the daily and get some of that off. And I want to kind of show you guys where we came back to. In this case, this right here was all about looking at where we are getting back to some very heavy levels down at this bottom. I really want to see Monday that SoFi can get a little bit further down, okay? Right up in this little area here. Initially, I was mostly looking at like right up in here. And we had that little push down in this area. You guys see we broke above it. We pushed down, pushed up, got back here, came up again. And so now we are trying to retest that $25 area. This is where I have been waiting for us to get back to so that I can, one, average down on some of my shares and get some more, as well as get into a call to hold for like December, January on this one. And we came down. Let me see, they stopped it at, go up in here. So they stopped it at 25.66, almost there. But when I say I like to perfect my entries, like I had a specific target in mind, which is like right at 25. And as you can see, around 25.03 here, actually. I had a specific target in mind. Could I have made my move? Possibly, because they pushed it down and they pushed it back up to 28.24, and then it closed out 26.53. Would have been some opportunity there to make a move, but my mind was so set on hitting my level. Let's see, right up in here, and then making a move. So definitely want you guys to kind of keep it on your radar. I'm looking at 2 to 3 weeks of my expiration here for like my first contract, but I always sell my first contract at 30%. So it's like it could possibly take, I don't know, it could take a week. It may not even take a week for us to really get all the way back up here. Not a week, I'm sorry. It may take between 3 weeks to 4 weeks to get all the way back up here to the final target that I'll be looking at. So $25 was my place of entry. And I was set like that first goal at around this little area right up in here. Okay, just kind of looking at small previous rejections were happening so that I don't be in my trade, get in, we ride it up here, and then this thing starts to come back down as it kind of shows you here. This is the daily time frame, by the way. So it shows you that hitting those little areas and again up in here before it finally broke above it. So if we can get that down here, this is where I'm looking to make my move. My first little target is around these little tops here. I have my next target right up in this area, up in here where we had this little rejection here on September, and this thing came all the way back down. And my last target is at 32. That's what I'm looking for. Now, getting below $25, we are definitely going to start testing these lower bottoms. 23, we got this little piece around here at 22, and then, of course, coming down to those high 20. So that's what I want you guys to watch for on SoFi going into next week. Okay, could be a major opportunity. That's I like to say your $100 to $1,000 play. What is it? The strike price, depending on your strike price, and depending on how many contracts you have. The more contracts, of course, more profit. The better your delta, the higher your profits, whether you have one contract or more. Okay, so keep that in mind. I was getting super excited about this, but I didn't act on it because we didn't come as far as I wanted it to. And we still push right back up. So we definitely need to see this get back below this 26.69 so we can retest this and react from there. Okay. So far, keep that one. Intel. We've done some trades on Intel in the Skool community as well. So as you guys can see, it's already marked up. So with this one, come back over. We were getting back to this area here. You guys see down here, we still got this gap to fill. We still have this gap to fill, but I'm not going to really put my focus on the gap yet until we can get below $33, which is this little area here. We get below that, opens the door for this gap to start getting filled. They can bring this thing back down. So just still keep your eye on that. But right now, I wanted to see one or two things happen from that sell-off, but one or three. Getting back below is 36.25. If we can get back below that, get in this little area here and hold up above that, I would get in here and then sell my first set of contracts at this $36 target and then leave the runners to retest these highs here. But if we did get below that, I still would really want to watch it because I don't want to jump in prematurely with these levels here getting retested. I done got in way up here or here, and we start to come down, okay? These right here are either my levels to watch for entry or for exits. Just basically saying that, all right, if I do get in, let's say we break below there, I know for a fact we're going to try to retest this 34. So entering around this area will tell me you might want to get out here just in case it decides to hold up and it starts pushing back up. Okay, so I'm mainly wanting to see this thing come back down so I can ride this thing back up long term. If we can get below $33, perfect. Because I know that then we can start making our way that down to get this gap filled. This right here was that last trade that we did on Intel, that pennant, and it pushed up. Okay, so I really want to see it get back below 33 and we can get here. But for the time being, this little area here is where I was looking to see it come back Friday to get into longs with this one and ride it up. My targets initially on this one is about 38. When we getting up to these tops at about 39, maybe another contract. And of course, this very peak here at about 39.54. Now, my thing with this one, not 39, 42, 48. But we can just have to kind of see how that thing works. Breaking above that, of course, we will likely push a little bit higher. We just kind of have to wait this thing out. But getting back to this level, as long as we're above this here, and we can hold, the bulls will remain in control of this one, and we can get this thing pushing back up. Okay, so keep your eye on Intel. And I wanted to share these because getting some trades to you guys that are, the premiums aren't too expensive for those of you, either you're working with a small account, you're new to it, or you need some trades to kind of, that you're not risking your entire account just to do. Okay. Now, the next one is open. Open, a few things were open. I've actually shared a trade plan with this one. I did share it. Open got back below this little level here where I got this box. Getting back below that, I knew we were coming down further, okay? And getting below this here, which is, what is that? That 5. You guys see where we have this up in here? Getting back below all of that, all right, we're coming further down. But here's the thing with open. With them selling off, like I was saying at the beginning, with them, registering to sell 180 million shares, this thing is going to bring it back down a little bit further. Okay, there is a high chance that we will be coming back high $3.50, maybe 4. I'm kind of eyeing 3.50, to be honest with you. Getting back below this is really going to bring it back down. They have this stock split happening, a 31 for 30. Simple as, if you have, for every 30 shares of Open Door that you have, you will now have 31. That's all that is, okay? And it's kind of the way I'm looking at with this one here, and this literally happens on the 18th. This stock split is their adjustment to this their shareholder stock sell-off that's taking place. And so whatever the price is come November 18th, it's not going to make a huge change, okay? Because this little 31 for 30 isn't like a 10 for 1, 20 for 1, where it's just really being cut. That's not what this one is, okay? So depending on what the price is here, I wouldn't be surprised if come time for the stock split, we're back at those low $4, okay? But there's still some opportunity here to ride this thing down, especially with us getting below here. I'm gonna go to the 4 hour. and kind of see how this thing move. Turn it on regular hour. Okay. So we pushed up and what we closed at 6:55. Okay. But I do not believe that we're going to hold there too long. I do not believe, especially if we can't get back over that 705. I'm definitely watching this here because you see how long we held up here and how long that thing finally breaks below that. They testing it, trying to see how low can we push this thing. And in this case, the low on this was $5.25. So I don't think that we're going to get back over that 7 area. You might get some overkill, but I think we're going to come back down, considering with the news, with the stock sell-off, and then this little stock split happening. Not a major one, but with it happening, it could come further down. Okay. So keep it on your radar. Opportunity to the downside. And this could be some opportunities to the upside, but honestly, I'm not interested in any more calls on open unless we break back over that 705 and begin to push back up, simply because it's telling us when the buyers are in control is over this area here. Okay. I want to be where they're in control to even look calls way to ride this thing back up. All right. So definitely keep that on your radar. All right. And I'll share some more on this one throughout the week as we kind of see how the news progresses with the sale, what the stock is doing. But once we get back down here and like really hold down here, be coming down, and then that's where the opportunity to get some more downside is coming. All right. So let's look at let me see. MSTR is going to be the other one that I want. Now this one, like I said, is if this one here is like, I guess I would say another Tesla in terms of volatility, this could be your one. But let me see, what was it? You might need about 1,800, maybe 2,000, especially if you're trying to do some not leaps, but swings, like maybe you're trying to hold it for a week, hold it for 2 weeks. I'm gonna need some change on that one. Let me see. MSCI and the option chain, of course, going to have to reset. But for the most part, Friday, let's just say you want to get into at the money call, in the money call, 240 strike. You would have been needing at least $1,000 on that one. Going higher up, let's just say, let's see, a $200 strike will cost you $4,400. Okay, this option chain looks about the same as Tesla. I'm trying to hold this thing to December. I'm gonna need about $2,000. So this is out of that arena with SoFi, Intel, Open, and all of them. But this one is getting back to a very, I'm sorry, getting back. It is at a let me see. Let me go back. Okay. So this one is back at a level that I have kind of been watching. I had my alerts set up on this one. And yeah, we're gonna look at NVIDIA after this one here. So let me remove all of this also we can redo our drawing. You can see instantly on this 4 hour, even if we go to that daily, take some of this off, you can see where we are getting that to our micro strategy. Now, this is what I was looking for. I didn't even have it initially down here. I was right around this area here, right up in here. But as you guys can see, with Friday, when we sell-offs happening, we came all the way and we broke below that. And the low on this candle was $219.68. I've had this little line here for a minute at that 231, and we broke below that. And so breaking below that, I was looking for opportunity to get back here, hold up, and ride this thing back up. But breaking below that 231, it opens the door for us to get back to 200, which is slightly another level I've been watching, but I wasn't expecting it to really come back down here. Okay. So come back down here, I guess I would say so soon, but we could possibly be making our way back to around that $200 area. Okay. And so I wanted you guys to kind of keep this one on the radar if you're able to trade it. And I don't highly recommend you going too far out of the money with this one. I brought this up to a student and she went to what she can afford think she said it was like 200. She was too far out. This one here is one of those ones that has those high thetas, extreme volatility, and you want to be on the right side of the trade with MicroStrategy, okay? Because that theta will eat away at your profit. So try to be as close on that strike price as you can with this one. But we are getting back to, if this here can't get back and hold up here, then I will definitely be looking for us to come back down some to potentially make a move back to the upside. Now, breaking below 200, I'm probably going to sit it out to kind of see what's going to kind of take place with this one. Okay, so keep it on your radar. Um, See what it does come Monday, or just kind of look at this one throughout the week. Okay, so we kind of push back up some, but I want to see how well it holds up above that, considering they did some very nice testing below that 231 area. So just watch it, see what it does. If you decide to make a move on it, just keep in mind where it broke. It broke a very, very heavy level. You touch that, you push back up. A lot of times when you look at touches in certain areas, it'll tell you how strong that area is, because every time the price gets back there, a massive rally happens, all right? Or vice versa. So we hit here, we went from about 234 all the way up to about 316. Hit that level again, and we went all the way back up to 344. Same thing here, around this same area, pushed up to 430. So it's over time, but you see what happens when it gets to this level. It lets you know how strong that level is. So that's something to pay attention to. And breaking it can let you know, all right, we could possibly be coming back down now that they're trying to test below that. Just got to see. Okay. So keep that one. Keep that one. Be sure you just remember the premiums on this one's up there. So do what you're comfortable with. Okay. Now let's go to NVIDIA. And I'll also be putting trade plans for these things in the Skool community as the opportunity kind of presents itself. And a lot of times when I'm doing that, it's like, okay, I'm also preparing to kind of look for my move here as well. Okay. So NVIDIA, I'm going to take this off. And I can take this alert off because yeah, we broke all the way through that. So let me take all of this stuff off. Now, let me mark up where NVIDIA is at this moment. We are right up in this area here. Okay. NVIDIA was, of course, a part of this massive, massive sell-off that was taking place. And we saw this thing rallying because of the partnerships that they've been dishing out like crazy. They recently hit a $5 trillion market cap, but this drop from up here to here brought us back down to, I think, like 4.4, 4.5 trillion. So it's kind of pushed it out of that 5 trillion for now with this little sell-off that happened. But hey, it was to be expected. But I'm going to show you guys what and why I think we could possibly get some more downside with them. We broke below this level here. Now we did push back up, but they tested those waters down here again, and they may be trying to retest it. You can see right up in here. Let me put this, go back. There we go. Right up in here. All these touches that we got at around this 184. Okay. Heavy, heavy level. We got down below it. And when I saw this happen, I was actually expecting us to get back to like maybe 170, 175, 170, a little bit lower, but it made its way back up. Okay, so I'm going to go to that hourly and kind of look at how that thing kind of moved. A lot of stocks moved did the exact same thing. They broke below a very heavy level that it's been holding up for months, and then it pushed right back above it. And even though that happens, that's just the bears kind of showing us where they want to take the price back to. And then we may see that little run up once we get, to a certain point. But I'm definitely expecting NVIDIA to come back down some more. But if you took some losses on NVIDIA, it's cool. It happens. We just kind of got to look for that next opportunity, because that sell-off that took place was probably unexpected for a lot of people. And a lot of people were probably in positions that they weren't expecting to, come down like that, or calls rather. So it happens. And I think someone mentioned that about, their loss on NVIDIA in the Skool community, but it happens. Okay. So just got to look for that secondary opportunity. to see what goes down. But with them getting down here, I'm really looking for 175, 170, possibly get in. And I'm also looking to average down on some shares on this one too. So I want to see how this thing plays out come Monday. And let's see, let me go to that 15. I know some of you guys may day trade this thing as well. So let me clear that up. And you can kind of see here, we had got ourselves a little gap and it filled that thing right on back up. Okay. Right up in here. This is just a common little gap. Remember, sometimes gaps get filled, sometimes they don't. In this case, it got filled. Okay. So that's another reason why I think we may come back down. They pushed it down right up in here. When the market opened, we got that gap from here to here, came down, refilled it. And I want to see that we come back again. Okay, come back under that. And you can kind of see how when they get to moving, they get to retesting them level. That little gap there pushed up is kind of held up right up in here and start to push a little bit higher. So if I was looking at this one here, I wouldn't be surprised come Monday. Either we get stopped out kind of around 190 if it pushes that high and starts to come back down, or we play along these little lines here where that gap was at, and we may push back down a little bit more before we make another move to the upside. Okay. But don't let this scare you away from NVIDIA. Okay. The biggest companies in the world are relying on NVIDIA's chips. They are let me see. Let me see 190 now. In that right up in here. Let me see. Oh, yeah. And it stopped right at 190. Oh, okay. So yeah, it stopped right at 190.19. But I just noticed something. But a lot of times I don't really go by patterns too much when I'm seeing them in this pre-market. Like in pre-market or post-market, because a lot changes with that. But you guys kind of see this here. It's kind of making it on there, and you might see that we might come back down and retest this little area. It might be around 185, and then possibly can try to push it back up to kind of retest that, or it invalidates and it holds below that, and we kind of come back down kind of here 180, or start to push down a little bit more. And what happens with this, let's say we come down, we come up. This is a head and shoulder pattern, by the way. But if it does invalidate and comes back down, it might push up again, retesting this 185, may push back lower. Kind of got to see. It's different ways that this thing can kind of go with them, but you can kind of see where, let me put this little right at the bottom of these little bottoms here, right up in here, and kind of look for a retest here. So multiple ways that this can happen. You just got to kind of watch and react to it. Okay, so we literally did push right back up to that 190, right up in there. Okay, so gotta just kind of watch it. Gotta kind of see. It hit a lot of people hard on this one. And that's understandable. That's definitely understandable. So gotta cut out. We sometimes gotta cut our losses. NVIDIA is kind of one of those ones. I didn't like cutting my losses because you never knew with NVIDIA. You never know what the next partnership was going to be, what their next release was going to be. And so I'm like, you know what? We got 2 more days left. And I got 2 more days on my expiration. I'm holding NVIDIA. I'm going to ride it out. I don't care if I'm down 90%. That used to be my thought process with NVIDIA, but I had to get out of that. So it's all right. We just got to kind of react to what happens as we go, and depending on how you guys are looking to do it, whether you're day trading it or swing trading it, just react accordingly. And the levels will always tell you what you need to know. Going back to what I said earlier, it's us all about knowing when to get out of the trade. When you hit your profit, you hit your goals, and go from there. Okay. And that 190 stop is kind of understandable. You can kind of see right up in this little area, kind of where I would have been looking, that 190, 191, right up in there. And so we kind of hit back up there a little bit in the post market. So it stood there. Just see where we are Monday. All right. And around 200, we said 200, we will need to get back up. And before we can even get to 200, we're going to need to break back above this 195 here. Okay. We're going to need to break back above that, hold it to push farther up. If not, we might be kind of playing along these little levels up in here this incoming week, depending on how it looks. Okay. But one of the things we do know is that whatever NVIDIA does, the market reacts. Okay, so if they're down, a lot of the others are down. You kind of got to remember, like I was saying, everything's reliant on NVIDIA. NVIDIA is, they provide the chips for a lot of the things that we're using. And the more we're seeing going into AI, it's not just quantum computing that we need to watch. NVIDIA is also one of them. They are literally leading the AI charge. Okay. Now you say OpenAI, they're not a public company, but everyone's kind of partnering with them. But NVIDIA leads the charge. Okay. So that's something. And then speaking of quantum computing, I definitely want you guys to keep RGTI still on your radar. This one right here, I posted this one in the Skool community through that video, and it has been an amazing trade. Now, I made a post and said I was closing my RGTI and my IonQ trades. I changed my mind. I did sell off IonQ, but I kept RGTI. They broke below my level, another level I had, and I decided to hold it until Monday. That thing's still going because this is what I'm looking for. I wanted to see a break below that 34.14, a hold below it, and us getting all the way back down to that 28.78. And I'm looking for a hold here. Okay, we get in here, we hold here. I'm making my next move for a rinse and repeat to ride it back up. So I'm going to kind of watch that Monday and bring in another trade plan on this one, okay? But the entire trade plan was based on this bear flag. Downtrend, this upward consolidation, we got that breakout where I was waiting for, and we rolled this thing all the way down, okay? So they have earnings coming up Monday, November 10th. So I really wanted to see this thing get back here so that I can kind of make a move according to that. But I want to see what happens with earnings to make my next move. Okay, as long as we can hold up above 28.78, we can push higher. If not, we're going to be coming back down. And the next little area, or I guess I would say open range I would be looking for, is for us to come all the way back down this area to about $18 and kind of see how it plays in here. Okay, so if you were able to catch on to that trade, then good job. That was an amazing play. I'm still holding this thing simply from getting my break. So I'm likely going to come out Monday for real this time. So we'll look back at that one really, really soon. And they have a lot of partnerships that they have been getting into in this AI space as well. So we're definitely going to keep eyes on that one. Let me see. Look at Google. Okay. And like I was saying earlier with Google and Apple's partnership, definitely keep Google on your radar. Okay. Let me come up here. Let me take that off. And you guys see where I got that yellow line there? That was literally the last trade that I did on Google. When we got this break above here, I was all in to ride this thing up. I think I got out at like maybe 270. Amazing play. Once we had got that break back over, I was holding this thing for a while, for a little bit. And so once we got over here, you can easily see with that little resistance we were working with here, broke above that, and I was in. Okay, so that run up here, especially from earnings, was very, very nice. I didn't stay in too long because when we get those run ups, we can come back down at any moment. And so I went ahead and got out. Could have stayed in. Yeah, I had a nice little run up to, what was that? Almost $300, $291. But hey, I was good with what I had. And that was that. Okay. So right now, this is where we are. Just a gap. Let me see. Look like they kind of touched back down at that point where they pushed up here. And then they came back down, touched that. So if I don't know, were you looking at a day trade for it, or are you looking at something to hold longer term? Google is also on my list of stocks that I get and hold. As of right now, I have probably like 3 shares in Google, but would that come down here? I was definitely looking for me to get some more. I added my third one on down here. Okay, it was probably like 258 if I'm not mistaken. I had added another share to it. So this is one of those ones that even if you can't buy a full share, at least start with partial so that you can kind of work your way up. Google is just another one. We already know we know what Google got going on. We know that this is one of those quality companies alongside the Mag 7 that we add for an extended period of time to our portfolios. Okay. So, yeah, day trades and long term. And so, let me show you something that I actually caught this recently. You see this here? Depending on how this thing goes, I won't be surprised if we push up a little bit more, kind of right up in this area here. You see where it kind of stops out right up in here? We push up there. We kind of got this little bear flag that we kind of working with up in here. It's small, little upside consolidation, but this thing came down. It held up above that 275 area. We kind of push up a little bit more, potentially get stopped out right around here. There may be some opportunity there to kind of ride it down. Personally, I would like to see one or two things happen and get back to 275 for a potential ride up, or we break above this 281 and ride back up. We break above it and hold it. Okay. So I had kind of caught this when I was kind of going through the charts, and I kind of saw this happening, but this is on the hourly time frame. So depending on what Monday looks like, and it does decide, okay, it continues to make its way up, come in around this little area up in here around 280, 281, possibly catch a downside move there, depending on if it can break back above it. Okay, so I would personally say watch their pre-market, see how it moves. And then, matter of fact, hold on, extended hours. Let's see. Okay, never mind. I'll be forgetting to go back and forth to my extended hours to see how it moved in the post market. So this little flag here still present itself. It may stop out around this area and start to push back down. You could either make a move here under that trade and ride it down short term. And I would kind of look for one, let me see, right up in here. So let's say you make a move, 281, it stops, rejects, and starts to come back down. 278 will personally be my first target, where I'll be looking at up in this little area here. Or I would be looking for a breakout, kind of getting below 278 and riding it down to 275, or just kind of taking profit along the way, maybe halfway on, let's just say $2 move, $2.50 move, sell off a contract up to, and then come back down. When I trade Google, I usually get like 2 contracts so I can have 2 targets. One sell and the other was my runner. So keep your eyes on that right there. We kind of have a little flag here, and depending on how that play out, we could maybe see some downside come in, depending on if some news hit. Matter of fact, let me click this. Let's see. Alphabet, Google, parent leads in the AI research and aims to merge traditional search with generative AI, highlighted by its development of Gemini AI models. Let's see. Let me see. Google will support 3.2 billion of Fluidstack's debt to TeraWolf and 1.4 billion to Cipher Mining, gaining equity warrants and securing cloud capacity assets. So I just wanted to come and see really quickly if anything. So depending on what other news hits or how things go, come Monday opening, if you decide you want to day trade it, kind of watch that flag here and get some downside. But either way, holding up above 275, I would actually look to make a move around that area to ride it back up, depending on what happens here Monday. Okay, we get a break above that, I will be looking for calls to kind of make a move there as well. So opportunity there, but you can kind of see where they've been kind of playing at around this little area. So see what happens here. All right. And then also too, adding it to your investment portfolio. My biggest thing that I always like to say is do not wait for something to get at the top before you decide to make a move. Let stuff come back. And I wanted to come to this one really quickly because when that run up happened, everybody wanted to rush in to get into this thing, but allow the pullback to happen. Let me go to the 4-hour time frame real quickly. Okay, so you can see where that gap is. That gap is not yet filled. We still got a good little way to go, but we did come down. And if we could get below 227, something I've been waiting for, I said we can start to come back down to 215, 210, getting back to 200 and seeing what happens here. When we get below that, we can come that down some more. That sell-off really brought us down, and I really want to see how this thing goes and go to the extended. and it kind of pushed right back up to where I have this little line here at about 236 from when it broke. So I definitely want to see how this thing moves come, well, I'm gonna say Monday, but the entire next week, because I would love to see this gap filled. But even if it isn't filled, plenty of opportunity. If we can hold up above 203, we can kind of stay afloat to ride it back up. But getting below that, all of this lower stuff could be incoming, short term, long term, or I'm about to say over time. Okay, but this is why you never get scared when those little when this jump happens. This here, let me see, how much was that? If we go from here to this very peak here, that was $101 move. I know somebody be thinking, okay, we had a run up like that, we can go. I would never. $101 move. This is where corrections come in at. A massive move like this happened. Corrections is literally to get the price back to a fair value. And even though we got this little gap here, they would be looking to bring it back. That's why gaps too get filled from correction. That's what I like to wait for, because jumping in at something that just made $100 move like that, absolutely not. Okay, you never want to put yourself in that position, regardless of how much FOMO you get. Just keep reminding yourself a correction is coming or a pullback is coming before I make my move. Okay, so keep that in mind. So what I'm looking for on AMD, I'm definitely I have some alerts turned on for this one. I want to see where we're working with. If we can get back down, or if it holds below this, kind of push back down, just literally have to see what happens on Monday. Okay. But I wanted to come to this really quickly because everyone was going crazy over this jump. I'm like, look, here we come back down some, then I'll make a move, because that right there, you just setting yourself up to get into something that you think can continue going up. And when something like this happens, people are consolidating at that top, they're selling off position, and they're taking profit. Don't put yourself in that position. Okay. So we're going to talk more about AMD as well. Because we're going to talk a lot about AI. We're going to talk a lot about quantum computing. We're going to talk a lot about this drive that the biggest companies are making, because what happens every time something just get extremely, extremely popular? They look at this thing as a bubble. And we're seeing some sell-offs happen, either between Warren Buffett. We just see that Mike Burry, if you're not familiar with the Big Short from the 2008 housing crash, he is literally shorting NVIDIA and Palantir with a combined $1 billion. I think it was a hedge investment on that, because his portfolio is made up of some of the top companies, and Palantir and NVIDIA are two of them. I think his biggest position is in Palantir, and he has a short because he, like you said, you spotted that 2008 housing crash coming. It happened, and he's doing the same thing with Palantir right now, as well as NVIDIA. So when stuff like that happens, we follow the money. And a lot of times, I'm not saying just do puts across the board, but watch it, respond and react to how things are kind of going. Okay. So I'm in tech. I love tech. I love AI. I think that there are some necessary components to it and some very unnecessary components to it, but we kind of got to see how this thing plays out. Okay. So that was, I think I put that in the Skool community, where he sold off Kathy Woods of Art. She also really trimmed her position in Palantir. She's been increasing her position in Amazon. So that's it. Amazon, Alibaba, Intelia, Therapeutics, and a number of others. I think she trimmed in DraftKings as well. I got to look back at it. So follow the money. Follow the money. Semiconductor and nuclear energy. I was watching Carrie O'Leary, Mr. Wonderful, and he was talking about AI data centers needing the gigawatts of nuclear power. Oh, absolutely. Somebody got to power. And that's why I put in that little research thing that I put in the Skool community, where I was saying you have to follow where the money is being pushed. This is why 2 months ago I said, watch these quantum computing stocks. They could change your life. And literally, you guys, them things were up 30 to 100% a month later, simply because the more that's going into AI, we have to also look at who's facilitating this stuff, who's powering the data centers, who's building, whose infrastructure is this stuff being built on. Quantum computing is behind the machine learning side of things and a number of other things that's needed to train these AI models. If you got somebody like Meta building a data center the size of Manhattan, you know how much power is going to be needed for that? You know how much infrastructure is needed? We have to go where to the people who will benefit the most. You can't afford Meta. Find the people on the back end that's going to benefit from such massive build. The Oracle Stargate project is a $500 billion AI project where they're building 5 massive data centers, hyperscale data centers. Who's building them? Okay, Floor Corporations is one of them. If you're looking at Bloom Energy, Next Era Energy, Constellations, Duke, these people will benefit from such massive push in these data centers because somebody has to power them, somebody has to build them, and then somebody has to train this AI that they're trying to push out so heavily. So follow the money. That's the biggest thing that I've been really saying is that we see where the money is going, but the people that's pushing the money out, their stocks may be too expensive right now. Follow all of that, and it'll lead you to some of the best gems that you can find. We're getting IonQ, Big Bear AI, which we were just looking at with RGTI, major partnership that they're working in. And I wouldn't be surprised if they're next to start seeing some massive partnerships with anyone between Google, NVIDIA, and just a number of others. Okay, so definitely keep these quantum computing stocks on your radar. They also, I've shared with this IonQ had a similar setup with that bear flag and all of that. Okay, so keep all of that on your radar as far as this AI thing goes. Okay, a lot of money is being pushed out. Sam Altman has been on a mission to raise over $7 trillion for a few years now to even facilitate all of this stuff. I believe he's going to do it. I said in a video, what, a year ago or so, I said I think he's going to do it. And it was either going to be through, I didn't think through revenue. I figured it was going to be through partnerships or going public. And it has been so far, they've hit over $1 trillion so far in just partnerships alone. So that just really shows you how much they're looking to pour into AI right now. And as they do, we got so many different places that we can be really getting into. Okay, so that's why I've been posting a lot about that RGTI, quantum, and all of that, because it's low right now. They're underdogs right now, but all of these stocks that we've seen have been at one point. Okay, so you we gotta watch it. They say it's a bubble, but I think a lot of it is the bubble, like all this unnecessary stuff. Okay, Sora. You've seen what everybody's doing with Sora, which is open AI video model. It's just like some parts of this stuff is very unnecessary, but when we're seeing this thing being integrated into healthcare, we're seeing it being integrated into real estate. We've seen it being, of course, our smartphone, a number of other things, business models, automation, that generative AI into design software. It's like some of it is necessary, but some of it is unnecessary. And I think that right now, that unnecessary side of it is what results in it really being looked at as a massive bubble right now. But a lot of these layoffs that are taking place are a result of them wanting to shift their focus towards AI, cutting costs. Amazon say? They tried to say it has something to do with culture. I think it has everything to do with automation. They are pushing out a lot of their workforce to replace it with a lot of automations, cutting costs in that area, because we know Amazon not hurting for money. So it had nothing to do with that. And it had nothing to do with culture either, if you ask me. They are just looking at that automation side of things. Okay, so it's a lot. But the money will always tell you where to put yours. I'd be stalking Kathy Woods like crazy, watching Warren Buffett's SEC filing. I also look at Mike Burry from time to time, because with that successful of, I guess I would say we can't just really base that one successful prediction with the housing crash with him, but I do like his perspective on a lot of things. But he's another one that I follow. Nancy that sat here and retired That's been on my mental for about a couple of days now, because it's like, how much more access are we going to have to her portfolio? You know that Congress, when they invest, we get to see what they're invested in as a transparency thing. Now, y'all didn't hear it here, but I know Nancy be doing some inside trading, and I would like to continue to see what she inside trading on, but you got to see how that goes. So she has been the top dog on her investment portfolio, massive. And a lot of her predictions and where her money has been flowing has always had some amazing outcomes. So yeah, it's a bunch of others. Capitaltrades.com. I already talked to you guys about that. That's where you can go and see where Congress is investing. Okay, where they're putting their money, where they're taking their money out of, how much of it, you know, all of that. Kathy Woods, kathysart.com. That's where you can see her company, all of her ETFs that she's invested in, how much of it, and so forth. So you are also able to go to SEC filings, and you can see different SEC filings from major players, see where they're putting their money in. Okay, so plenty of places to go and follow the money. Articles, yeah, but always look beyond the article, because a lot of times the articles can lead us to different places, but it won't give us everything. Sometimes we have to take it upon ourselves to go and find the rest. Okay, that's why research is so important. So yeah, that's pretty much what I wanted to look at tonight. I want a lot of you guys to go and look into AWS, which is Amazon Web Services. Okay, I want you to see that Amazon is way more than just a marketplace. It's Kathy's arc. Let me go back. Hold on. Let me go back in. Get my screen share back up. Kathy's arc. I'm trying to make sure it's KATHIES ARK, ARK.com. I'm trying to make sure is Kathy's with the S or just Kathy? Let me see. Kathy's. Okay, yeah, Kathy's art with the S and then art. And you'll be able to see everything that's in their holdings. They have various ETFs. I have a few of them, and you're able to see all of that. Okay. And let me see. AWS controls so many apps, banking platforms, educational systems we use. They are a top dog in that. Like, a lot of people think Amazon just that marketplace. It's not. Amazon, when they went down, I know them churns were mad. Fortnite and Roblox were down. Robinhood was down. Parts of Meta app, Meta, Meta, Facebook, Instagram, WhatsApp, all of that stuff, Threads, it's all built on WAS. Okay, OnlyFans, banking, all of that stuff. Folks was talking about what Amazon got to do with OnlyFans. Baby, they're running on AWS. So when they had that that data center outage, everything was down. All right. So your OnlyFans was down, blame Amazon. That was all them up there. I don't know what was going on, but that's what happened. So keep that in mind. Okay. They more than that marketplace. So that's all that is. So yeah, I just put that one in there. And then Warren Buffett, Berkshire Hathaway. You can of course see. I really hate their website. So that's why I just prefer to kind of go and look at a lot of their Warren Buffett made too much money for this website to still be looking like 1978. It drives me nuts. But you can click the links to their SEC filings, and that's where you can go and see different stuff. Okay. So I just prefer to do that. So let me put that website in there really quickly, and you can kind of keep up with what's going on with that. And you're looking to see about Berkshire and Hathaway, and then Capital Trades. Just in case you guys weren't in the last one, let me see, Capital Trades. And we're gonna look more at probably kind of in the Skool community. We're gonna kind of look back at Capital One. This just reminded me with this one, because Capital One has been kind of in a class action suit over them shorting people on their savings, under savings and things like that. So a judge just denied their 425. What is this thing doing? Is denied their I think it was $425, if I'm not mistaken, settlement. So can kind of watch that. I don't know why this thing is not pasting. And okay, I think you guys can see it though. It's capitaltrades.com. I'm trying to paste it. And every time I click over here, I don't know. But yeah, you can come over here and you can kind of see who's, and go to the politicians list. And you're able to see a number of politicians to kind of see what they are investing in, how much they're pushing out. Marjorie Taylor Greene is another one as well. Now that Nancy's about to be out, and there's a possibility that we're not able to see what Nancy's investing in after she retires, which I'm not mistaken. Once they retire, once they're no longer in politics, we will no longer be able to see what they got going on. And you are absolutely right about Major Green. She is a little bit shady, but her portfolio has led me to some great trades. I won't even lie to you. So you can kind of see where she's been putting her money at. Netflix, Microsoft, Chevron, Blackstone Group, Berkshire Hathaway. I like to invest into this one as well. The other one, not the $700,000. The one of the Berkshire Hathaway. Let me see which one she. Let me see which class stock she did in Berkshire B. Okay, so this is the one for 739. That ain't where I be at. I be in the class A, which is the other one. It's about $400, $500. Okay, so that one, this one here, she's a good one too. She's definitely a good one. I know for a fact she'd be inside trading, but y'all ain't hear that over here. That one, follow her as well. If Nancy leaves us hanging, this is somebody else y'all can come to for now. Cleo Fields, I found Open Door through Cleo Field. It was good for the moment, but we can kind of see how that thing is kind of moving right now. So it led to a great trade for the moment. Investment wise, I got to kind of see how that goes. Okay. Let me see. Her biggest investment right now, she's done 15 in Amazon, 13 in Tesla, 13 in post office, and then she got about 374 others, and then US Treasury bills she got up here. Okay. So you can always come look at their portfolio, see where they are investing. Okay. And so her volume is sitting at about 8.66 million, 443 trades, 93 issuers. That's just basically saying the company. So issuers just mean company. Her last trade was November 6th. What was that? I'm assuming here. So she just put Procter and Gamble, and let's see how much she went with. Oh, there we go. My bad. So I'm just trying to basically looking at what she has. They're looking at about 15K to 50K what she recently put in. And this number here is just basically looking at the overall based on the politicians on this site right here. So yeah, you can kind of use that and see what we got going. You can kind of see the trades by the parties, trades by Democrats, trades by Republicans. Do I think that matter? Not fully, but hey, however you want to do your research, that's up to you. I'm still unsure about when to enter a trade. Should I wait for confirmation, or is that just me being too cautious? My question would be: are you just second guessing making your moves. Like a lot of times we know when to get into the trade. Like let's just say, well, let me ask you this. What are you using any particular method or strategies to make your moves? As far as how are you making a decision to even enter? Like, are you looking to things like support and resistance? Are you just looking at the charts and just trying to see if you should jump in, jump out? Like, what are you doing currently to decide on a move for a trade? So I'm gonna close some of this stuff out. So this is we're gonna talk more about a lot of this stuff here. Let me see. I definitely want you guys to keep TSMC on the radar too, because they are the ones who are manufacturing NVIDIA's chips. And this is why I was talking about that reliance aspect. A lot of top companies are relying on NVIDIA's chips and their infrastructure. NVIDIA is relying on TSM to manufacture their chips. Without TSM, there are no NVIDIA chips, or at least that's not to the capacity that we are seeing it now. So NVIDIA, TSM, keep them both on your radar. I'm going to be uploading some more trades plans for this one. Okay, so just something I want you guys to kind of keep watch of. Okay, so let me go back to the charts for you really quickly before we end it. Before we close this thing out, because when you are trying to make a decision on, I'm not sure if you were here when I was doing the lesson on the orb strategy or marking up your pre-market highs and pre-market lows, but when you're waiting for confirmation, your confirmation could be an additional candle. It could be a breakout. It could be hitting a certain level. It just really all depends. Like a lot of times you could be being too cautious. You can never be too cautious on the market, but you don't want to be so cautious that you're not making a move at all. You're missing a great entry, possibly missing a great exit. So it all depends on how you're even looking for your trade, how you're looking to make your move for me to even really know. Okay, so if you are, I'm assuming if you're on this live, you're in the Skool community. So when I post this, you can kind of let me know there, and I can kind of talk more about it, to kind of be able to help you a little bit more on getting into it. But the first thing on finding your entry is finding your levels. You got to find the heavy levels or the key levels for you to even make your move. Okay, so we can talk more about that. You can just, either put this question there or send me a message on Skool so that I can get a better understanding of what you're currently doing. Okay. Let me see. I just learned about ETF SOXQ, but I may buy that one right out. Let me see. Go SOXQ. Let me see. Okay. Oh, okay. Okay. So yeah. So like you have some places like this is where, you know what, this is gonna be something I'm gonna put in the Skool community. When you can't afford certain stocks, go to things that follow the movement of those stocks. Like if you can't afford to trade Tesla, go to TSLL. If you don't want to trade QQQ, you have TQQQ you can look at. There are other ways for you to be able to go into trades to where you can't afford the actual one. Look for others that are identical. NVIDIA has one. Apple has one. They have weekly pay ETFs that you can also look at. I'll go into all of those that will track the stocks that are currently up there. I'm like, all right, I don't got $200-300 to buy 10 shares of this company, but you may have, let's just say $20-30 for some of these ETFs or some of these or ETPs rather. That's what TSLL is. You're able to do that. So I'll talk more about those as well. So thanks for bringing that one up because that reminded me. I haven't talked about those yet. So we'll get into that so you guys can have multiple places to go when you don't want to trade the actual stock or invest in it as well. I recommend doing that, but just in case you can have multiple things in your arsenal. So you can put your money in multiple places. You can trade in multiple places as you grow your account so that it allows you to go to the bigger stocks. Okay. So I'm going to get out of here. I'll have this thing up in the Skool community once it compresses to make it small enough to go in the Skool community, because we definitely went a bit over what I wanted to do. I was trying to keep it small because it'd be hard to upload stuff in that Skool community. So I will say next one we're going to be doing is looking at mostly in research, of course, market recap as well, but also showing you guys how to properly research. Okay. Because there's something that I do consistently on my end is you have to kind of put two and two together so that when you're getting ready to trade, finding stocks and things like that, you know exactly where to go. Okay, so we're going to talk a lot about research, talk about some more trading strategies and trade planning, a big one, trade planning as well. So I will see you guys next Saturday. Go easy on the market. I'll say that now. Go easy. Don't get too scared. That correction could still be going. That correction wasn't Friday. It actually started, I want to say Monday, but mostly like that Tuesday, that Wednesday when we started seeing that kick in. We already know what was going on. Okay. So if it's not, the conditions aren't right, don't try to jump in. It's too choppy. You're not getting anything clear. Don't try to overdo it. Okay. Just let it come to you. Once that Netflix stock split happens, we're going to talk more about that too, so that we can kind of navigate that together. And I can kind of give you guys what I plan on doing. And then, of course, you guys can make your decision from there on how you want to go about it. Okay. So, you guys have an amazing night. An amazing rest of your weekend, and feel free ask any questions as always, so that if you weren't here when we first started, or if you just had some things that you want to see me cover in these Saturday lives, let me know. All right, so I will see you guys next Saturday. Good night, and you're welcome to all of you guys. Thank you guys for tuning in tonight too. Let me go back.